Paul, we're watching, of course, the impact across Chinese markets on that decision by the PBOC to hold that. I wonder what your view is in terms of market speculation that maybe we get a reserve ratio cut. Maybe there's some optimism that comes through on that front at a time, of course, when there are real questions about whether or not that credit demand and that impulse coming through across the Chinese economy is really there, Paul.
Yeah, it's a really difficult balancing act for the authorities, isn't it? How can they actually get that stimulus through to the economy and get people taking it up? They've obviously been thinking about it and decided that a rate cut on its own wouldn't be enough to really turn things around right now. Maybe the opportunity to do a triple R cut instead would free up more liquidity and get things going a little bit more through the economy. The added advantage of not doing the rate cut is that it supports the yuan, and we saw another strong pushback from the authorities with the fixing today to make sure that the currency doesn't weaken too much. But I think the hope is also that there's going to be more coming through on the fiscal side. We're already seeing some impact there, but it's a very slow burner. And so, you know, the market will take a little bit more time to absorb that information. So today we saw more disappointments, more weakness in equities, not the rally that we were expecting on the back of a change. But the market holds on to those hopes, like you said, for the triple R cut that would inject some more money into the market, and then for fiscal measures that will give, you know, kind of reignite that confidence and get money flowing again.
Well, there's plenty of confidence in Japanese equities, Paul. Another decent day, of course, for Japanese stocks. Is anything going to derail this rally in Japan?
Well, eventually we'll probably run out of gas. But actually, the topics is, you know, up for an 8th straight day today. It loves going on a run like this. I think that if you look back in September last year, April last year, March the year before, and September 2021, it had 8-day runs. So it kind of goes on these big winning streaks and picks up that sort of momentum. There's plenty of opportunities or reasons to be excited about Japan. People are opening up more investment accounts, more domestic cash is coming in, and we've got the reforms in corporate governance as well. But eventually, of course, it's going to run out of juice and take a pause at least.
And stateside, of course, closed for a national holiday today, but PPI coming in softer than expected. Again, as we said in the headlines, the bets around those Fed cuts coming through pretty aggressively.
Yeah, absolutely. And the market really is hanging on this now, isn't it? The probability of those rate cuts is back to 80% for March. The 2-year yield is the lowest in several months. Really, the market is pretty one-sided in the way that it's leaning now and waiting for that confirmation to come through in the data. There was a sigh of relief, really, with that PPI to justify what we're pricing in now. So we'll need to continue to see that justification, and then we'll need to hear the Fed speakers to really kind of back that up.